everybody. It is a real pleasure for us today, Iris and I, to be present with you online for this webinar about a very important topic, the CSRD. How to manage it? Well, we hope we will answer most of your questions during this webinar. So before we get started, some important information. First, this webinar will be recorded. We give you the option to review this webinar after this session, and also to give the option to everybody who could not make it today, unfortunately, to rewatch what we say today. So the replay will be available after this session, and please, at the end, you will have time to share your questions. Feel free to use the Q&A feature or the chat feature to share your questions, and we'll do our best to answer them. Thank you very much to those who shared already some questions with us. So we did our best to design this presentation to address some of them, but we'll take time to cover the rest as well. For the comfort of everybody, please avoid to unmute yourself and use the chat feature or the Q&A feature. And well, remember, you are free to use your camera, but remember, it's 96% of emissions on top of a normal communication. So maybe we can try to switch them on to save a bit CO2 emissions. Today, we are very lucky because I'm here with Iris De Orte. She's our Chief Compliance Officer, and let me tell you that Iris knows everything we should be aware of about the climate, the new climate regulations that are coming. Iris has a bit more than 10 years of experience as a lawyer, but also finance and in other compliance elements. I will just stop 1 minute to admit everybody, and the time for me to say hello to the people who just joined us. Myself, I'm Frederic. I'm the co-founder of D-Carbonize, and I'm in charge of the operations, meaning that I cover all of the assignments that we have with our customers, and also I make this connection between business needs, customers' needs, and features related to our product. Who we are at D-Carbonize, we are a SaaS company, and we develop a software to help companies to measure and reduce their CO2 emissions. And on top of this software, we offer a series of services that can help you to perform a carbon footprint assessment, design a carbon reduction strategy, internalize this new competence that is carbon accounting. We have a full suite of services that can help you to move forward. We are certified and getting some certifications. We are certified by the Solar Impulse Foundation, and we are being audited by the French ADEME to get this famous attestation of compliance with the methodology developed by ADEME. We have around 45 customers right now, and we work in 12 different countries. Oh, Sarah, say you cannot hear us, Sarah? Can hear you. Can everybody hear us? Can someone just make sure that you can hear us? Yes. Okay. Sarah, I'm very sorry. Maybe try with your speaker. And if you can't, let me know. We'll see what we can do. So as I said, 45 customers, and we are working in 12 different countries, and we have now over than 3.5 million tons of CO2 under management in our software. This number increases quite fast, unfortunately, but this gives us motivation to decrease it on our side thanks to our software. So today we have a very dense menu. So I've spoken too much already, and I will hand over directly to Iris that will lead you through this menu that we prepared for you. And again, enjoy this discussion, and let's take 10 minutes at the end of this presentation to answer your questions. Thank you very much. Iris, over to you.
Good afternoon, everyone. So today's agenda, we are going to start with the regulatory context of EU environmental law. We are going to talk about the scope and application calendar of the CSRD, the reporting obligation of the CSRD, particularly related to climate change, and some reporting steps on how to disclose this information. So I will start with the regulatory context. As you know, the pressure today on businesses doesn't come only from regulation. It comes also for customer expectations, from investors, from your own staff and employees. And it's forcing companies really to define a carbon reduction strategy. Of course, like any regulation, this puts an administrative burden on companies, but I want to see always the bright side of things. So I want to see the benefits and opportunities that this can bring to companies. For example, the way that companies could improve their reputation or improve their resilience or assess the supply chains to keep their employees motivated, and how this can have an impact on an increase on their profits. When we look at the EU in particular, because of course we are seeing all around the world that many countries have signed the Paris Agreement, they have environmental commitments to fulfill, so they are putting in place certain environmental laws. When it comes to the EU, they are going even beyond those environmental objectives, and they have made, according to the European climate law, it's binding for the EU actually to reduce greenhouse gas emissions by 2030, 55%, and to achieve climate neutrality by 2050. That's why they are putting in place a lot of regulations and directives as part of a Fit for 55 package and other regulations outside this package to comply with these environmental objectives, because we are, of course, far from achieving these objectives as of today. So today we are going to start with the CSRD, which stands for Corporate Sustainability Reporting Directive. What is the scope? What is the calendar application? But before I talk about the CSRD, I would like to talk about the Non-Financial Reporting Directive, because to give you a little bit of context, the CSRD aims to replace and improve the Non-Financial Reporting Directive. So the NFRD actually applies, it's a reporting that applies to environmental matters, to social and employee matters, human rights, anti-corruption and bribery, diversity on the company's administrative bodies, and the scope of the NFRD is companies that have more than 500 employees and which are considered public interest entities. So for example, listed companies, credit institutions, insurance companies, or also other companies that member states define as public interest entities. So the CSRD actually tried to replace and improve the Non-Financial Reporting Directive and everything related to environmental, social, and governance, ACG reporting. The objective is actually to enhance comparability, transparency, and sustainability reporting, and the CSRD applies to more companies than the Non-Financial Reporting Directive. Actually, it applies to companies that meet two of the following criteria. Companies with at least 250 employees, with at least 40 million euros of turnover and 20 million euros of total assets. Later on, we will see how the CSRD would also apply to certain small and medium enterprises and to non-EU parent companies under certain circumstances. So for the CSRD, the European Commission, together with IFRAC, they have developed a set of standards which are called European Sustainability Reporting Standards. And they actually offer some guidance to companies on how to disclose and how to report on CSRD. There will be also lighter reporting for companies with less than 750 employees during the first year, because they have realized there's a lot of to report, and we will see it during this presentation. So there is, in order to give time for companies to prepare and get ready. When we look at the calendar application, we see that next year, next financial year 2024, companies which are subject already to the Non-Financial Reporting Directive, they will have to submit their reports on 2024. So that it applies to them already, to those companies. Later on, during the financial year 2025, the CSRD will apply to those companies considered as large companies with the definition that we have just seen, which were not subject to the Non-Financial Reporting Directive previously. There will be a period of 2 years with small and medium enterprises, listed enterprises. They can choose if they want to report or not. And later on, from 2028 for that financial year, with reports due in 2029, the CSRD will also apply to non-EU parent companies, as long as they have more than 150 million euros turnover, and they have a EU large or listed subsidiary or a EU subsidiary or branch with more than 40 million euros of turnover. This is the calendar of application, so you can already see if your company suits any of these categories. Also, maybe you are part of a small and medium company. There will be also voluntary standards for those companies who are not listed, SMEs who are not listed, and who want to report on CSRD as well. What does it mean not only for EU companies that need to report under the CSRD, but also to all companies who work with these reporting companies? It might be a non-EU supplier, or it might be a small medium enterprise, which is a provider of a EU reporting company. At the end of the day, the reporting company needs to disclose on obligations scope 1, 2, and 3, and that includes also emission from suppliers. That's why the EU reporting company is going to look at the supply chain, is going to start engaging with suppliers, and that will involve indirectly and will have an impact indirectly on other companies as well. Actually, I would like to mention the TCFD, the Task Force on Climate-Related Financial Disclosure, and we will see how the TCFD is super relevant along the presentation, because the EU has used it as an inspiration for the CSRD as well. Not only that, but the TCFD is part of some countries' regulatory framework, like the UK or Switzerland. The TCFD, for those of you who don't know it, because maybe some of you work for companies who are using it on a voluntary basis, is a set of recommendations on disclosure of environmental risks and opportunities, very focused on climate, divided in a structure of governance, strategy, risk management, including what are the climate-related risks, and metrics and targets, including a scope 2, 1, 2, and 3, and the corresponding targets. This is also related to CDP, so the Carbon Disclosure Project, formerly known as the Carbon Disclosure Project, which is a reporting system aligned with the TCFD. And we can think about the CDP as a worldwide environmental database that is also used on a voluntary basis by many companies, because it helps them to have a ranking on their performance, on their environmental performance, and also to share information with third parties. It might be clients, it might be other stakeholders, it might be providers. So we have to take into account the TCFD. We will see how it is related to a CSRD in more detail later. That's when it comes to the scope and the calendar application of the CSRD. I would like to talk briefly about the Corporate Sustainability Due Diligence Directive, also known as Corporate Sustainability 3D, because even though it's in phase of proposal at the moment, I think it's important to see what is coming, to what is ahead after the CSRD. And I think it's really linked to the CSRD in a way, because the CSDD, the objective is actually to identify, to prevent, and to mitigate human rights and environmental impacts resulting from business practices, and asking companies to align the business strategy with the Paris Agreement obligation, which is limiting global warming to 1.5 degrees. So the CSDDD will apply to companies which are larger than the CSRD. For example, companies with 500 employees and 150 million of turnover, to 100 employees and 40 million euros of turnover, but will also apply to non-EU companies with certain revenue, which work in certain sectors which are considered more sensitive. Some important remarks about the Corporate Sustainability Due Diligence Directive is that there will be a director duty of care on sustainability matters. So that put a little bit of pressures on top management and directors. They need to understand and they need to put in place strategies and due diligence processes to make sure the company takes sustainability in a serious manner. Also, there is a part of civil liability responsibility. So companies are liable for damages if appropriate measures are not put in place to prevent those adverse effects on the community, or if they are not putting any action or remedy to bring those adverse impacts to an end. So this is something important to consider maybe on the long term, because right now it's still a phase of proposal. It was published in 2022, and agreement maybe is expected to be reached in 2024. I would like to continue with the Corporate Sustainability Reporting Directive, but more the reporting obligations. This is a slide that I really like because it shows with an helicopter view all the information that will need to be disclosed by a company as long as it's material for their activity. So we can see at the top how the company will need to disclose general requirements, general disclosures, and then we see 3 blocks, which is the environmental, social, and governance. Within environmental information, companies will need to disclose on water and marine resources, on pollution, on climate change, biodiversity and ecosystems, circular economy. When it comes to social information, companies will need to report to disclose information on their own workforce, but also on the workers across their value chain. Also, what will be the effect on the affected communities and the consumers and end users. When it comes to governance information, companies will need to disclose information on their corporate culture, but also on corruption and bribery, and how they engage with politics, and so on. So this is more what it applies in general for sector agnostic sectors. But at the end of the day, the European Union will also publish European sustainability reporting standards per sector. So that will become as well for certain sectors which are considered more sensitive. That will come. They have not been published those yet. So, for example, I wanted to go back to this slide. We see that I highlighted climate change because I want to look at the climate change part with more detail to see how much information only in climate change companies will need to disclose. So we have an idea how, in general, how much information companies will need to share as part of the CSRD. So if we look at the climate change in more detail, we see that there is a part of general disclosure. So what is the integration of sustainability related performance in remuneration? What is the transition plan for climate change mitigation? What are the impact, risk, and opportunities that the company has identified and how they interact with their business strategy and the business model? Also, what is the process that the company follows to identify and assess these material climate-related impacts, risks, and opportunities. Apart from the general disclosures, the company will need to share, okay, now that we have identified the impact, risks, and opportunity, how do we manage those risks? What are the policies that we put in place to for climate change mitigation and adaptation? What are the actions, but also financial resources that we put in place for climate change policies? And there is another part which relates to more quantitative information, which is metrics and targets. For example, the targets related to mitigation and adaptation, but also energy consumption, the scopes 1, 2, and 3, the removals, if any, through carbon credits, the internal carbon pricing, and also the potential financial effects for all the material risks that have been identified previously. That's when it comes to climate change. So still, if we go and if we go into more detail in each of these disclosures, we see that there's a lot of items, different items that need to be disclosed. This part is a little bit dense, but still I think it's necessary to go through it so you can understand how much information companies will need to disclose if climate change is a material for their activity. So we start, for example, with the remuneration of members of administrative management and supervisory boards. They will need to show, really, companies how climate-related considerations are factored in the remuneration of the management staff. Also, when it comes to disclosure 1, companies will need to share the transition plan for climate change mitigation, which includes the reduction targets with limiting global warming to 1.5 degrees, what are the key actions planned, including maybe change to company products or to services, adoption of new technologies. Companies will also need to disclose on their mitigation actions and also the investment and the funding, the monetary value that they are going to assign. Also, they will need to do a qualitative assessment on the company key assets and products and how the emissions are going to have an impact on the business strategy and the emission reduction targets. Also, of course, if there are activities which are covered by taxonomy regulation, because CSRD has a close relation to taxonomy regulation, companies will need to explain the objective and the plan of those activities. If applicable, companies will need to disclose the amount invested in oil, gas, and related activities in this sector. They will also need to say if the company is excluded from the EU Paris aligned benchmark, if the transition plan is aligned with the company's business strategy and the financial planning, if it's approved by the administrative body, and what is the progress. They will need to say what is the progress in the implementation of this transition plan indeed. There is a part related to material impact, risk, and opportunities. So companies will need to classify its material risk as physical risk or climate-related transition risk. So physical risks are more like climate-related events like fires or floods, whereas transition risks are more considered like an action plan with this size that the use or the consumption of fossil fuels is going to be reduced. So that will have an impact on the company as well. And the company will need to identify and classify those impacts and say, okay, this is going to be the impact on my company strategy, on my business model, and to use different scenario analysis. Of course, they will need also to report on climate change, but we will see that as part of the disclosure number 6, which is specifically dedicated to scope 1, 2, and 3. And they will need to say, okay, so the climate-related physical risks that I have identified, what impact do they have across the value chain, and especially in the business activities which are more sensitive to those physical risks. And the same for the climate-related transition risk. What are the impacts across the value chains, especially for the more sensitive business activities. But it's not only identifying the impacts. Also, you have to put in place, companies have to put in place policies to address and to manage those impacts, those risks, those opportunities related to climate change mitigation and adaptation, energy efficiency, renewable energy deployment. And they also have to put in place actions and resources to say these are the actions that I'm going to put in place, and this is the monetary value that I'm going to assign for those actions. So as you can see, there is a lot to disclose, but these disclosures involve a lot of discussion, internal discussion within different departments, and it involved really a reflection on the business strategy, assessing the impact, identifying different businesses opportunities. So that's why I always recommend companies to start as early as possible with the CSRD obligation reporting, because that's why actually the European Union gave a certain period of time before the adoption, before it's going to enter in force and apply to certain companies, to give them the time to really plan ahead. So I always recommend companies to react as soon as possible. That will take time, and it's not something that you can plan in a week because it involves different departments as well. Coming back to the disclosures, we see, for example, disclosure number 4 is about targets. So what are the targets related to climate change mitigation and adaptations that the company is putting in place? Greenhouse gas emission reduction targets, showing the company base year and the baseline as well, updating it with the reduction targets after every 5 years. Also, if those reduction targets are science-based and compatible with limiting global warming to 1.5 degrees, what is the methodology that had been used to determine those targets, different policy scenarios, if the target has been externally assured, and how the company has considered future developments. For example, change in sale volumes, shift in customer preference, regulatory factors, how the company is considering all those factors. Of course, this disclosure number 4 includes the description of the decarbonization levers. For example, how the company wants to achieve these reduction targets for the use by using renewable energy, or by phasing out certain products and processes. When it comes to disclosure number 5, it's about the energy consumption and mix. If it's related also to fossil fuels, nuclear sources, what is the total energy consumption for renewable sources, and the energy intensity, especially related with activities in high climate impact sectors. The disclosure number 6 talks about scope 1, 2, and 3. Also, which part of these greenhouse gas emissions are regulated under an emission trading system, if any. Some companies will be under an ETS system. Distinction also between the scope 2 emissions measure what is the methodology used, if it's location-based method versus market-based method, and one is the greenhouse gas intensity based on net revenue. So of course, we always recommend as well to start gathering all this information. This also takes time because in order to define scope 1, 2, and 3, you need to gather data, you need to convert that business activity into CO2 equivalent, you need to identify major sources of emissions, and that takes time as well, obviously, to have the quantitative information, the metrics, the targets. When it comes to disclosure number 7, it's about all the greenhouse gas removals through carbon credits, if any. Some companies will need to disclose that as well in a separate disclosure number 7. And their explanation as well, what kind of the credibility and integrity of the carbon credit that had been used, like if they are compatible or not with the emission reduction targets, and how really support this emission reduction target and not try to replace them, actually. When we see the disclosure number 8, and there are 9, so we are going to conclude very soon. The number 8 is about internal carbon pricing, if any, if it applies to the company, and how this support the company decision to implement climate-related policies and targets. And when it comes to the disclosure number 9, we have seen that the company has to identify material, physical risk and transition risk. But of course, it has also to identify what are the opportunities, the financial effects, because it can be risk and opportunities behind those impacts, both for material physical risk and for transition risk over the short, medium, and long term. What is the monetary value of this material risk if there is going to be any significant asset and material physical risk? What is the percentage of net revenue that is expected to be gained or lose from those risks, both from transition and physical risk? And we will see later how this becomes very relevant when doing this classification between physical and transition. Okay, so then.
Well, thank you very much, Iris, for this very condensed but dense way to summarize the CSRD. It will impact quite a lot the way that we need to report our non-financial elements that we need to report every year. But I guess that there are different steps that we need to follow in order to make it happen, right? And I think that one of the first one is this double materiality assessment. I think it's something quite unique in Europe. Could you please tell us a bit more about what it is?
Indeed. So I would like to go more now into the part of, how do we start from here? We know how much information we have to disclose, which is a lot. And I would like to remind you again that I only talk about climate change, but there are other sustainability matters under the CSRD. So companies need to start with the double materiality assessment. And indeed, FRED is something more unique to Europe, because in other countries around the world, they still use a materiality assessment, a single materiality assessment. But the double materiality assessment says, okay, the company has to look at what is the impact that the company, the activity of the company has on the people and on the environment, and what is the impact on the environment in the business activity. So it's from inside out and from the environment and the people in the company. So the first one is called impact materiality. So the company needs to identify, okay, what are those impacts, actual or potential, positive or negative, of the company's activity on the people and on the environment. And on the other hand, the financial materiality is about identifying those risks and opportunities that have a material influence, or they can have a material influence on the company development, on the financial position, on the financial performance, and the cash flow due to climate change related events. So this, we are going to break it down. It talks about impacts. The double materiality assessment talks about impacts, which can be negative or positive. It assesses them in the short, medium, and long term. For negative impacts, there is a distinction between actual impacts or potential impacts. And for actual impacts, the company will need to look at the severity of the impact. What is the scale, the scope? Can I actually avoid this impact from happening? And for the potential impacts, what is the severity and what is the likelihood? And for the materiality assessment of a positive impact over the short, medium, and long term as well, again, for actual impacts, companies will need to look at the scale and the scope, and for potential impact at the scale, scope, and the likelihood. That's what it comes for when it's regarding impact. Regarding risk and opportunities, also over the short, medium, and long term, it will be a combination of the likelihood of the occurrence and the potential magnitude of the financial effect that it's going to have in the company. So some questions that a company can start doing to themselves is like, how might environmental issues impact your company? How might your company impact the environment? What climate-related risks and opportunities can be identified for your company? How could climate change cost your company money in the short term? Or what impact will a 4-degree temperature rise by 250 have on your company, for example? There is some questions that you can start asking yourself, but there is also some steps to conduct a double materiality assessment to offer some more guidance, which are the following. So I suggest companies start identifying and engaging with stakeholders because they will be also able to identify easily what impacts the business activity have on them. Also, the company can identify what potential relevant sustainability matters are related to their business activity from those that we have seen in the helicopter view. They can continue with the definition of impact, risk, and opportunities, and assessing the impacts. Are these positive, negative impacts? Are they actual? Are they potential? The same with financial risk and opportunities, really assessing those financial risk and opportunities. Then we can conclude it with a materiality overview. And then, of course, there is a part of risk management. Okay, we have now identified the financial risk. We have now identified the opportunities, but how do we manage those risks? How those risks have an implication on our business strategy? And that comes with policies and actions that the company needs to put in place. And then we come back to the CSRD, as I was mentioning before, because if we see the part of risk management is really related to what we have just said, the metrics and targets as well. Indeed, we can use the TCFD as a guidance to identify certain risk, the transition risk, policy and legal, technology, market reputation, as we have seen before, transition risk as opposed to physical risk. Which can be considered something that is one event driven or more like chronic long-term risk, physical risk. And again, for the opportunities, we can identify opportunities, resource efficiency, energy source related to product and services, to market, to resilience. So there is a lot of material to reflect on and a lot of insights to get on from this exercise as well. And that's why I was saying before that I see the CSRD more than as an administrative burden, also as an opportunity to do this exercise and look within the company. When it comes to report on climate change disclosures, we cannot really report on when we do not measure at the end of the day. That's why a greenhouse gas inventory is the first step to understand the source of emission of a company and to take relevant actions to control and reduce carbon footprint. And I would like to let Fred to continue with the part briefly talking about how we conduct a carbon footprint assessment and how it's important as a first step actually for CSRD reporting, especially for climate change.
Yeah, thank you very much, Iris. I really like the way you took that sentence, because usually we use this one, but in a slightly different way. We always say we cannot reduce what we do not measure, because in the end, and I think you clearly stated it, if governments or the European Commission require from companies to report, it's with the ambition to reduce our environmental impact. So for the next 10 minutes, and please already prepare maybe some questions or some comments that you would like to share, because we will cover them in a moment. So I just want to tell you during 10 minutes how to measure greenhouse gas emissions. So it usually starts by selecting the standard you would like to use to measure your CO2 emissions. So at D-Carbonize, we use two of them. The first one, the one that we use quite usually, especially for international customers, that will be the greenhouse gas protocol. It is the standard that you will find at the global scale. In France, there is also a methodology that is developed by the French ADEME. It's the French Agency for New Energy and Ecology. And this standard includes a series of values, of principles, of ways of reporting and decreasing CO2 emissions. Overall, the idea is to get a carbon footprint assessment. And it always starts by following two conditions. The first one, you need to have an accurate carbon footprint assessment. And to have it, you need to dive into two different sorts of data. The first one would be the activity data that you are collecting. So we're talking about the kilogram of raw materials that you are buying, the kilometers that you're driving with your car, the business trips that you are doing, the energy that you are consuming. And we will multiply all these activities data with an emission factor. Emission factor is a sort of ratio that will convert, for example, 1 kilogram of plastic into CO2 equivalent. It's really important to understand what is a CO2 equivalent. It is the carbon dioxide equivalent, meaning that behind that you have all the different greenhouse gas emissions that you need to measure to have a report that is compliant with the greenhouse gas protocol or the ADEME. And to get those emission factors, you can access them via the different databases. Some are public and others would be private. That's for the first condition. The second condition is to have a complete carbon footprint assessment. So there are three scopes to cover. The first one would be your direct emissions. So literally the emissions from the combustion of fossil fuels or other chemicals that you will use for your activities. Scope 2, in a nutshell, that would be the electricity consumption. And this is an indirect emission, but still related to the energy that you use. Indirect, why? Because the emission is emitted at the power plant, not directly at your site. And scope 3 is literally the rest, that you can break down into two subcategories, upstream emissions and downstream emissions, where you will find different elements related to your assets, your commute, business trips, purchase, and so on. So in the way that we report at D-Carbonize is by looking at the three scopes, and we organize our data as per the different dimensions, because we believe that using this framework, those 10 dimensions, gives a comprehensive vision of what is a carbon footprint assessment. And we have here the illustration of the different dimensions. So we talk about energy, process, mobility, packaging, waste, assets, logistics, purchasing, usage, end of life. And there is one element here that is very important that is missing, but for one particular sector, that would be the investments. Should you be a bank, for example, or an investment fund, you also need to account for the CO2 emissions related to your investments. This is one slide to briefly explain how we work, how we suggest any firm to measure their CO2 emissions. And in fact, it's a very simple process that should stick into 4 steps. The first one is to define your scope. What is the perimeter of your assessment? And this is to make sure that you meet one of the 2 conditions, that you need to have a complete carbon footprint assessment. Then you need to collect the data. But because you know what data you need to collect because you did a scope definition, you know who are the data owners, so you can list them, connect with them, and then explain to them what data you need, so that you can validate the second condition, that is to have a precise and accurate carbon footprint assessment. Then you measure your CO2 emissions. We do that with our product that creates automatically the CO2 emissions, the CO2 reporting, all the visuals that are needed. And in the end, you can report. You can report to be compliant with CSRD, but also with other labels that you can try to get to prove that you have a certain ESG maturity level. You can use with a lot of different, in a lot of different situations, carbon footprint assessment. So now I hope that we were able to answer all the questions that you may have. We invite you to use the chat feature or the Q&A to ask your question. And we already have one comment here from Emil. Thank you very much, Emil. So thanks you once again for this great presentation. My question: which European body is responsible for checking these reports? We're talking about audits and verification. That's a very good question, Emil. Thank you very much. Iris?
Yeah, actually, so the report will not be to be submitted in a certain platform for now. It will need to be more like reported as in the management section of the financial report. So I will have to check actually which institution. I don't know. I don't know by heart. It's something that I mean, as a good lawyer, I don't have the answers to everything. It's more like I go into the law and I check. I don't know if they have even defined the supervisory body, but I can come back to you, Emil, on that to if they have defined it already. I will let you know.
Okay. Well, thank you very much. And indeed, it's still a moving target, this CSRD, because the European Commission is still working on the final details. Do we have other questions? I have here on our side some questions from the participant who could not join today, and at least there was one that really struck me. Is let me find this question back. Yeah, this one I think is very relevant. So what are the main obstacles for a company to prepare a CSRD report?
Yeah, so I would say for me it's more like the time constraint. No, companies might think that they have time because the directive is only applying to them in a couple of years or 3. However, there is a part of data collection to identify all this quantitative information related to metrics and targets. Then there is a part of a strategy where a company has to assess this information. They have to understand how it impacts their business. So I think the main obstacle is the time is there, but companies have to use it smartly. And also that's one of the constraints that I see, obstacles. And the other one is to use an appropriate tool, because after all, to gather all this information might be difficult. To make certain calculations might be difficult as well if you don't have is the knowledge, and it can be complicated to replicate information year after year. So using an appropriate tool, like of course we recommend D-Carbonize for everything that has to do with measuring greenhouse gas emissions, but also setting up a reduction strategy in place, also which are reduction targets, which are science-based objectives also. So we recommend to use the right tool to face those obstacles and to start as early as possible.
Yeah, that's definitely true. Well, you are recommending some tools, and we received here this question: what are the best practices?
Best practices for me will be first to have an action, to a roadmap action plan, to engage different people in the organization, which might be involved in the CSRD reporting. So from finance department, because there will be financial impact, but anybody taking care of the sustainability, also the compliance team, the legal team. So involving different people who might be relevant for the CSRD, having the right tool. That will be a best practice as well, starting early, defining the action plan, as I said, and getting the work done. Yeah.
Okay. Yeah. Thank you very much. I think those are very relevant tips. We've got one last question here from internet, and that's a question that we receive quite a lot when we're discussing with people. So, how do companies decide what information to disclose?
Yeah, so first they will need to do double materiality assessment, and if any sustainability matter is material to them, either like with the impact materiality of the financial materiality or both, then they will need to disclose information on those sustainability matters, and they will need to follow the list of all the disclosures that we have seen. So I recommend companies to follow the steps to conduct the double materiality assessment, to identify the impacts, and then to follow the disclosures that are detailed on the European Sustainability Reporting Standards.
Yeah, thank you very much for that. And we have here one question from Sarah. Do you know the sanctions that can be applied in case of no compliance with CSRD?
So for now, the sanction is something that has to be reasonable, but it will be up to the member states to define the concrete sanctions. And as you know, this is a directive, the Corporate Sustainability Reporting Directive. So member states still need to transpose this directive into the national legislation, and they will set up the concrete figures for sanctions as well.
Okay, so we can expect sanctions to be on a national level.
Yes, they will be written there for sure, and that countries have 18 months to transpose the directive into their national laws.
Can you please remind us what is the first deadline to comply with?
Yes, so the first deadline, it will be more for companies which are already subject to the non-financial reporting directive. They will, for the financial year 2024, they will need to report on 2025. And then for that year onwards, it will start applying to companies considered as large enterprises, which were not subject to the non-financial reporting directive. Yeah, and something important to consider again is the upcoming corporate sustainability due diligence directive. It's important because it goes a little bit ahead. The CSRD is about reporting, but the CSRD is about due diligence processes and how to really prevent and mitigate environmental impacts and how to integrate it in your business strategy. So going a little bit beyond that as well.
Okay, well, great. Thank you very much for that. Last call for the remaining questions. And on my side, what I will just add on what you said is that indeed a carbon footprint assessment is now a major part of the environmental elements that you need to report. And keep in mind that a carbon footprint assessment takes a bit of time. Usually the first time it would take 6 months, and it takes several exercises to have a good carbon footprint assessment with enough visibility, precision, and clarity about data to really take actions to reduce your CO2 emissions. So that's also something to factor in this long-term strategy.
Indeed. Also, I would like to mention that we have some other next webinars coming. So actually the CSRD reporting obligations is part of a series of webinars. So we did the first webinar about how to measure a carbon footprint assessment for the first time. So you can ask us for the record if you want to watch it, if you didn't have the possibility to watch it a couple of weeks ago. And the next webinar will be on how to implement a good carbon reduction strategy. And webinar 4 will be how to become a good ACG manager. So please join us for those webinars because we will share interesting information as well.
Well, fantastic. Thank you very much, everybody, for your participation today. Thank you very much for all who registered and will watch this webinar again. If you have any questions or if you would like to have a more one-to-one discussion about your questions related to CSRD, or if you want to know more or move further with us, you have our email addresses here. Feel free to connect with us, and it's a real pleasure to speak with you. Have a good day, take care, and see you next time.
Thank you very much. See you very soon.